So what are the major challenges that an asset owner is facing in this environment?
Yeah, sure. Thanks. Thanks very much for having me, Will. Clearly, investment performance, investment risk is front of mind. There aren't many investment strategies that wouldn't have been affected by the market movements we've seen. So I'm sure many asset owners are sitting on some losses in their portfolio. Obviously, if you're investing using private markets, for example, it's the impact on those types of assets is still uncertain. So yeah, there's a lot of uncertainty. Obviously, as we speak, markets have recovered a little bit, but clearly the near-term outlook is really, really uncertain. Stakeholders really front of mind. As you can imagine, lots of questions, some really insightful questions. Actually, it's been really great interacting with our trustees and our clients. They've given us sort of different perspectives on things, so that's been really good. So yeah, lots of sharing of information, reviewing the position, thinking about the long term. So yeah, it's been a challenging time, and obviously having to do that, working from home in everyone's sort of makeshift home offices is really challenging. But yeah, we're getting through. The business is doing well. It's actually thriving in many ways, actually. So yeah.
Good. I mean, one of the characteristics of sort of large asset owners is that you typically can take a long-term view, but it's quite difficult at the moment to sort of get a sense of what's the long-term going to look like. Is it going to be a bit different from the way it has been in the past, or is this going to be a sort of short to medium-term sort of blip, and that will normal activity resume? How are you resolving that? How are you trying to work that out?
Yeah, sure. So I think with an asset owner, I think it's important to remember every different types of asset owners have different objectives, different investment horizons. There are many that really do have to think 1 or 2 years ahead, and with the uncertainty, that's very difficult. We're fortunate as a pension scheme, we can look really long term. In the scheme, we have a number of client sections who are open to new members who have a really long term investment horizon. And I think with those types of clients, it is genuinely possible to look through this period of market stress. For our closed sections, we are more mindful of what near-term outlook is. We try and we have various frameworks to help us think about the future, and ultimately the level of risk-adjusted returns you can expect from different types of asset classes is obviously really important to us and any investor, really. And then with there, you need to think, well, has the long-term outlook for growth or inflation materially changed? Has the long-term outlook for policy response and the likely market behavior changed as a result of this? And I think it's definitely too early to have any strong conviction. I think what we're seeing at the moment is, we are living through one of the most severe economic contractions, I think, in history. It might even break records, sadly. The world, as we know it, has just stopped demanding goods and services. It's, in most places, stopped producing them. And as you've seen with the oil market, those two things can really get out of line. I mean, in a world of negative oil prices, all bets are off. So the question is that temporary? Does that demand get pushed out, or have we seen a permanent kind of shift down in productivity? I think with that last scenario, we wouldn't put much weight on that just yet. Yes, there'll be more government debt as a result of this, but in theory, companies' household balance sheets should be able to repair themselves, and we can, go back to the sorts of cycles and long-term growth expectations we were expecting before the crisis. And there are actually some positive scenarios. This, making everyone work from home could accelerate trends in technology and more flexible working, and release some kind of potential productivity that was sitting beneath the surface, perhaps. The only downside is, in a world of very low interest rates, which is likely to remain the case certainly for the near term, once again, it stops bad companies from failing. And I think that's one of the reasons why this economic cycle has been so weak. We haven't had that kind of cathartic cleansing of companies that perhaps aren't particularly productive, and that capital hasn't been redistributed to other companies. So we're thinking through all of that. And in terms of how we are, as I say, frameworks, scenarios, research, we're still at the start of that process, really. I think we're trying not to make any any rash decisions. But clearly with the pension fund, more than perhaps any other asset owner, it's really important to think about what the long-term returns are, because obviously that informs how you discount the liabilities.
And what has the crisis done for your views on sustainability?
Sustainability is a word that gets used a lot, which is great. But I think it's important. It means different things to different people. So you've got financial sustainability, and I think about that as, in an ideal world, you generate returns in a nice, smooth way that your stakeholders understand and everyone's happy. And obviously there are things you can actively do to your portfolio companies that arguably helps with this sustainable path. So I think that's one way of thinking about ESG as almost an investment risk lens. Are companies that have good governance practices, good environmental and social policies less risky? Are they more sustainable? So that's one way to think about it. Another is to think about the broader mandate that maybe an asset owner has. So obviously you want to generate good financial outcomes for our members and other beneficiaries. That's clearly paramount, but it's important, I think, that we think about the broader mission objective we have, and it's about the world in our case, it's about the world our beneficiaries retire into. So that makes thinking about climate change arguably even more important. And so I think that's a pretty good place to start. Again, to bring up the oil price, in a world where oil price is zero, or if you look at future contracts, $20-30 a barrel, that does reduce the economic incentives to transition to a clean energy economy. And realistically, someone's going to need to fill that gap. So governments need to step in and provide those kind of substitutions, because if you look at history, any sort of energy transitions haven't really happened until the economic incentives are there. So that's one to think about. Obviously, asset owners have a role to play in terms of engaging with companies about their plans to support the energy transition. Another one that's quite interesting is governments have effectively bailed out the corporate sector. In the UK, it's very low interest loans. It's paying furloughed employee salaries. There's the question about whether they'd want some of that money back, and they might want that money back in other ways by influencing corporate activity and encouraging more sustainable working practices, etc. So I think there are pros and cons of what we're seeing. I say the energy transition has probably become harder, but other social improvements might be accelerated as a result, potentially.
So what are the kind of decision-making frameworks that you're using at the moment?
Yeah, sure. No, great question. In theory, your decision-making framework shouldn't necessarily be different in a crisis, but it definitely focuses the mind when you're seeing, your assets moving up and down and your stakeholders panicking. I think accurate information is really important, but it's important not to be, myopic, not to think sort of too short term. Focus on strategy. Is it still sound? What does the long term look like? Keeping stakeholders informed. And I think cognitive diversity, so having a range of different opinions when you're making decisions, is really, really important. Any institution is going to have people that perhaps have their head down, they're focused on their portfolio, they're thinking about liquidity, they're thinking about short-term opportunities. And I think it's really important that you have some people, what I like to say, sort of heads up, thinking about the long term, and maybe have a different kind of mental profile. They're seeing the elephant in the room, and whereas other people aren't. I think that's really, really important when you're in crisis mode, to have those different opinions and to have ways of communicating. But don't panic. Sometimes the hardest thing to do is to not make a decision and just rebalance and hold your ground.